Dear all, we believe ongoing economic recovery in India will lead to sustainable high growth over the long term. World Bank has also predicted India to be the fastest growing economy in the next 3 years. But there are potential downside risks which may make the markets volatile in the interim, such as possibility of government resorting to populist measures in the run up to 2019 elections, crude prices crossing US dollar 70 mark, US Fed rate hike and other geopolitical risks. This creates a dilemma for the investor who is expecting a bullish trend over the long term but is fearful of corrections in the interim. Kotak India Growth Fund is our 3-year close-ended multi-cap equity fund which could help investors in such a scenario. It has 3 distinct benefits which investors can consider. One, it's a close-ended structure, which means the fund manager has the freedom to fully invest into portfolio without any cash flow issues. 2, being a multi-cap fund, it would invest across large cap, mid cap and small cap stocks without any market cap bias. 3, a small portion of NAV goes into buying 3-year long dated put options to hedge the fund and also limit downside risk. In a declining market, put option appreciates in value, allowing profit booking at various corrections to reinvest in stocks at lower levels, since the need of hedging at lower level goes down. Generally, investors have come across 2 different types of close-ended equity fund structures in the market. One, long-only equity based on a theme or a broad-based fund. 2, long-only equity with a long-dated put option to limit downside risk. In our case, which is Kotak India Growth Fund, we would not only take a 3-year close-ended put option for hedging, but would also be open to the idea of booking partial profits in the put position if markets were to correct significantly in the interim and reinvest the same in stocks at better valuations. We are currently focused on the following themes which could do well in the medium to long term. Firstly, the theme of unorganized to organized, which could benefit banks, home building, retailing, auto components and many such sectors. Secondly, the increased government spending could benefit capital goods, rural sector, farm sector, construction and cement sectors. Thirdly, transmission of interest rates and resolution of legacy issues could benefit a lot of players in infrastructure sector, asset owners, construction, metals, power and utilities. Fourthly, the push towards clean, green India could benefit gas players, capital goods and renewable power players. Lastly, the financialization of physical to financial savings could benefit players in insurance sector, many banks and capital market companies. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.